Well, welcome to the second quarter update of 2021, halfway through the year. And not a lot has changed since the last time I talked to you, but I see some things developing I want to talk to you about, kind of give you a idea where my brain is at as far as investing right now. So imagine opening up a store, and we'll call it a $100 bill store. And we're going to sell those $100 bills for $90. Now, think about that. How much volume would we do? How much growth would we have? I mean, month over month, we'd probably have 1,000% growth each month. It would just be a phenomenal business model from a perspective of growth and volume. However, we're never going to make any money. In fact, we're going to lose money and eventually we're going to run out, right? That's what's going on in this world right now. We have initial public offerings. If I were to take that $100 bill store and take it as a IPO, an initial public offering, I'd become an instant billionaire overnight doing something like that. Yet I'm selling a business that has no chance of making money, and I'm seeing stuff like that go on. That's one issue. There's a lot of that kind of stuff with cryptocurrencies and other things that just are mind-boggling to me. But the bigger issue of what I see is people are calling for inflation. We're going to have inflation. Inflation is going to be out of control. I see it the opposite. I see us flirting with a situation of deflation, which is way worse and way more scary. And the Fed doesn't really have tools to deal with that. And let me explain why. So, right now we have inflation due to disruptions in supply chains, but continuous demand. I mean, lumber, people are still building, and the employees haven't been able to cut the wood because they've been home because of COVID and there's been a disruption. That will fix itself, just as everything else like chips for cars, silicon chips and all the things that are delaying the production of vehicles. All those things will take care of themselves. And I think this inflation is just kind of transitory as a result of what we're dealing with. However, the deflation comes into play because of something in a much bigger scale of something that I'm seeing. Before I go into it, I just want you to know that I'm watching this because I'm trying to be careful and not do something and step in front of a moving train. So I might be underperforming if markets continue to go up. I'm going to pull back a bit because I see this issue. So let me explain. So I follow what's called velocity of money. It's how fast a dollar bill moves from place A to place B. When you spend it somewhere, then that person you spent it with, they spend it too. How fast does that dollar move around the society is called velocity of money, and it's tracked by the St. Louis Fed. If you go look at the St. Louis Fed's website and you pull up the chart, you'll notice the last couple of decades we've had a declining velocity of money, which is why we really haven't had inflation and why all the calls for inflation in the past have not come true to the Fed printing money. Printing money does not cause inflation. Velocity does. And velocity has been trailing off. In fact, velocity has trailed off even through the COVID situation, yet the economy has done well, which is where I'm having my heartburn, where I'm having my issue. So the issue with velocity is that we're having a lot of trouble, in my opinion, moving dollars around because our economy is 70% of it is consumer spending. There are a lot more poor people than rich people, and that gap is widening. And societies don't work well when that happens. And we have a major problem developing when it comes to our poor getting poorer. We've got to find a way to bring them up because without it, it's going to hurt all of us that have money. So we have a problem developing that I don't know that we're going to get fixed. But think about the money that's been being put in their hands throughout the last year or so by the government. That's all going to stop. September 6th is the last day of any of that money. So just mere weeks ahead of us, we're looking at a potential issue that could cause a stoppage in the economy due to a lack of velocity. So my concern is that where is the spending going to come from? Now, unless the government between the time I'm making this video and that time they pass a stimulus bill or a infrastructure bill or something that can soften that gap, I'm really concerned about what may happen. So just wanted to let you know that velocity is a big issue. I've been watching it for a long time and I've not seen it increase, and I know why. So I'm going to be very cautious right now. We're still going to own the big names, the Amazons, the Googles, the major players, the Microsofts. We're going to own that. But we're going to have more cash. And that might cause us to underperform. But if you don't want me to do that, let me know. But I think that that's a prudent move going forward. We don't want to give back gains that we've had over the last 2 or 3 years. So anyhow, that's really all I have to say for now. Hopefully in the next month, 2, 3, we'll know more, and I'll come back to you and talk to you again. All right, thanks.